Michael, I'm curious. We know there's been a lot of damage done and positioning is weak, but what gives you the sense that we deserve stability around here?
Well, I guess another 10% down isn't necessarily stability, but I think that valuations are getting more reasonable. And I think what you're really starting to see is really a mental shift from investors where we're getting out of just this tech kind of focus and more tech that are positioned correctly with strong earnings and more speculative tech. Maybe that's what happened to Snap in terms of being assigned in that other category. So I think that some tech is getting to a point where I think the valuations are compelling enough where there should be some stability. And I don't think another 10% down is certainly out of the question. But I think we're getting to a point where tech with earnings rather than speculative tech, kind of the SoftBank sort of private equity sort of tech, I think is really starting to separate itself out.
How do you characterize earnings risk at this moment? And to what degree does apparent stability for the moment in yields lend some support, in your view?
Well, I think, first of all, I think we should really already start resetting expectations on earnings. If you just look at what's happening with the economy, with higher interest rates, with slowdowns, with potential recessions, on a global basis, I think we should all really just take a moment and recognize that it's going to be a shock if anybody comes back with really strong earnings. And so I think you need to build that into your purchase decision. You know, it's one of these things, Carl, that when you invest in an asset, you say, gee, I'd like to buy it at its bottom. You really, I mean, if I was so smart that I knew when exactly the bottom was, we probably wouldn't be talking today, right? So we're looking at buying more towards the bottom than the top. That really is what the key is. Now, yields are going to continue to rise, but have already come back from a 3-year, 10-year treasury. We're down a little bit. And I think that's a positive sign. Inflation is starting to perhaps start to slow just a little bit. Used car prices, housing sales. So I think it all really is starting to create some stability as we move into the second half of the year that we hadn't had before, where there was just rampant speculation of what might happen in the first 3 months of this year.
Michael, tell me more about why you think the Nasdaq's not going to fall more than 10% from here, because I look at the chart and I see even at 10% down, we're still not back down to the pre-pandemic peak. But a lot of the favorite stocks on the Nasdaq over the past couple of years are already down well below their pre-pandemic peaks. So is it that you feel that those stocks aren't going to fall much more, or that other stocks that haven't come down that far for some reason won't, even in the face of a slowing economy and rising interest rates?
Yeah, it's interesting. You know, I should probably not be as careless as saying the Nasdaq. What I'm really actually saying is if you separate out, say, the Apples and the Googles and the Microsofts of the world, and you separate that out from the other names, as you mentioned, that maybe some have fallen 40, 50, 60, 70%. I'm really talking more so about the more established sort of names in terms of 10% downside. I'm not making some prediction on QQQ because it's filled with all sorts of crazy stuff in there, right? So again, to be more clear, I guess what I would say is the NASDAQ stocks, the large cap or even mid cap stocks that have good quality earnings that have fallen, whether it's an Apple that's down, whatever it's down 20%, or I don't know the exact number right now. I think you're going to get to a point where you're going to see this division. So let's not say the NASDAQ. Let's instead say the earnings laden quality NASDAQ stocks, I think, won't fall more than 10%. You got other names in the market that could fall another 30, 40, 50% from where they're at after having already fallen 30, 40, 50%.